Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC, as weekly commentary as a basis for this market update. So let's jump right in and take a look at the market action last week. Here we see the S&P 500 was down 2.2%. The Canadian stock market was only down 1.1%. The difference between the two stock markets, with the Canadian stock market performing better, was largely attributable to the Canadian energy sector performing quite well last week. Last week, we did see Powell and Yellen testify before the Senate on COVID-19 relief. Yellen was advocating for more government spending and greater government debt. Powell was saying that more work needed to be done to help support the economy. Overall, the stock market still, nevertheless, went down for the week. We did see the yield on the 10-year Treasury note increase in the first part of the week and then saw it come down towards the end of the week. It closed marginally higher for the week. The big news of the week last week, the positive news, happened on Friday. That was the U.S. ISM Purchasing Managers Index, the PMI, which came in at 60.1 versus a 59.6 expected number. And that helps to support the stock market on Friday. On last week, we did see HAC increase its weighting in the S&P 500 as it tried to take advantage of the seasonal trend of the stock market performing well on the end of the month effect for September and into the beginning of October. Last week also as well, HAC exited its U.S. government bond position. U.S. government bonds haven't been performing that well recently, and they just finished their seasonal period last week as well. Last week, HAC also covered its position in the short sell position in the materials sector as well. If we take a look at what's going on in the markets here, we can see that here on Monday we saw the S&P 500 was down a little bit. Tuesday it was down quite a bit. Wednesday it held a little bit of ground. Thursday it was down quite a bit. And then Friday, as I mentioned, we saw that big uptick day on Friday for the S&P 500, largely to do with the higher PMI number coming out as well. If we take a look at the market on a sector level here, we can see that the S&P 500 was down 2.2% for a reference point. Look at the energy sector last week in the U.S. was up almost 6% last week. That's a huge number. And everything else, as far as the major sectors in the States, were negative. The financials were actually did quite well, just nominally negative compared to the rest of the market. If you take a look at the defensive, we just draw a line straight across here as well as we can. We can see that the defensives, other than the healthcare sector was down quite a bit last week, we're close to performing equivalent to the S&P 500. Now that's interesting because when you have a big down a week like we saw last week, usually it's the defensive sectors that, even though they could be down, it will actually be down typically less than the S&P 500, and that's not what we saw last week. So we did see some interesting movements as far as the risk on, risk off perspective goes. Technology was down quite a bit actually last week. And we saw industrials negative, but not as much as the S&P 500, and materials as well was negative, but not as much as the S&P 500. So what's happening in the stock market this week coming up? Well, first of all, we are seeing some battles take place within the White House administration and the U.S. government discussing the $3.5 trillion government spending package and the $1.5 trillion spending package in addition as well. And that's causing a little bit of concern for investors. Now, we are just starting the October, which overall, on average, tends to be a positive month, but tends to be volatile. A volatile month, which can lead to some opportunities along the way to get into the market. And October also starts the start of the 6-month favorable period for stocks towards the end of October. I think this week investors are really going to be looking at the non-farm payroll number that's coming out on Friday. It's expected to come out for September, producing 460,000 jobs. Now, it's important to look back at the September release for the August number of jobs, which came in at 235,000, which was quite a disappointment overall and caused some a little bit of concern in the market. So investors will be focusing on the non-farm payroll number this week as well. Thank you very much for joining me today.